Welcome back. You are still tuned into Midcap Radar on CNBC-TV18. Rossari Biotech is in focus. Key raw material costs are down 40% according to a Nirmal Bang report. This year itself, the company expects sequential margin recovery to continue. To discuss this and the outlook going forward, we are now joined by Sunil Chari, who is the co-founder and managing director at the company. Mr. Chari, good afternoon. Thank you so much for joining us. Now, there has been a decline in raw materials is what has been the case for the company. Can you tell us, after seeing this improvement in Q3 margins, will that continue in Q4? And will you see a better number in FY24 as well?
Yeah, it has been an exciting year for Rossari Biotech Limited. We saw a roller coaster ride of raw material prices going up and down, and now finally we see some stability in the raw material prices. We are seeing a very exciting year in the next financial year. We are seeing a lot of growth opportunities, particularly in the export market, and the domestic market also seems to have revived for us. We charted a new path of increasing our EBITDA margins, and as you see the last 3 quarters, our EBITDA margins have continuously increased, and we expect this to happen continuously in the next few quarters too.
So by that, by improvement, what do you mean? 10.9% was the margin in Q3 of last year. You improved it to 14%, 17 to 18%. Is that something that you'll get back to your original levels in FY24?
We are looking at improving whatever we did in this year to be better. As the year progresses, we would see definitely much more improvement. There's a lot of uncertainty, so it is difficult for me to promise any figure at this moment, but we see definitely better from what we are today.
2 months back, sir, you had given a guidance of 1,700 crores of a top line and 220 crores in terms of an EBITDA for FY23. And you had lowered your guidance. So the guidance I'm talking about of 1,700 crore and 220 crore is the lower guidance for revenues and EBITDA for this year. Are you on track to achieve it?
Yes, so we are on track with the improvement in the EBITDA margins and the target which we have achieved. And the next year, we think we should do much better than what we did this year. This year, the raw material prices fell, and consequently, our finished goods prices fell. And that is why we see, 1,700. Otherwise, we would have, did much better on this.
Okay, so this is about the raw material pricing that has come down. What about pricing for the finished goods? The HPPC segment was seeing some pressure in pricing. Has that improved? What about the other 2 segments, animal health and especially textile chemicals as well, because that was seeing some weakness?
So last 3 quarters, we charted a new journey. One thing was our acquisitions, which we did, Unitop and TriStar, did very well in the current financial year. In the next year, we are expecting it to be both to be double than what they were when we bought it. And the synergies between both the companies, luckily we got a good pool of talent of, skilled managerial talent of technically qualified people, good manufacturing facilities. And the synergy between Rossari, Unitop and TriStar, we are coming up with good silicone-based products, good ethoxylate products. There are a lot of new resins which we are planning. And this we see exciting opportunity both in the domestic and the export market.
Yes. So when you talk about exciting opportunities and newer products that you're coming up with, question 1 is, what will the growth in the export markets be versus domestic? And are these products or the current products seeing higher prices, or at least they're not seeing pressure on prices? Is that something that's happening?
Yeah, so as I said, the raw material prices now are practically to near pre-COVID levels. So our margins definitely have to increase, in the coming financial year. In terms of growth, we see more growth in the export markets than in the domestic markets. Of course, the growth in domestic markets has to be in double digits, but the growth in export market will be better than the domestic markets.
So consolidated growth is double digits, right, for next year?
Yes, definitely.
Okay, so about 10 to 15%? Is that a reasonable estimate?
Yeah, we would
Sure.
Definitely strive to achieve more.
Try to achieve more than that. Can you talk about the textile business? Has it bottomed out, or will we see a decline in revenues even in Q4? Because you have spoken about demand headwinds in that segment.
No, now, as you know, we have seen the last few months it has been better. So I think the textile business has bottomed out, and we see good growth opportunities in the coming financial year.
Mr. Chari, you're also working on new products in the paint segment. Now, we've spoken about a lot of people or a lot of companies entering the paint segment. What will it be for you? Which part of the supply chain will you be catering to? And will you be the only, or I would say, few of the companies in that space?
So, as you know, we are into 4 chemistries: silicone, enzyme, acrylic, and surfactants. So for the paint segment also, we are focusing on products which are based on surfactants. So they are ethoxylates and propoxylates and EOPO, block polymers and copolymers with other hydrophobes. But we also have a lot of products on defoamers, which are both silicone and non-silicone. We have some range of acrylic resins which we are launching for the paint industry. And also the other coating segments which are near adjacent to this paint industry. We see a good growth opportunity in the paint segment also in the next year.
I believe in Q3 your plant utilization was 55%. Has it picked up in the month of January, February and March?
Yeah, so March we saw a very good utilization, capacity utilization, which was much higher than what it was in the last quarter. I do not have still figures because we have yet to complete this quarter. But we see definitely, because if our selling total value, the total turnover is higher, that means, and if the FG prices are falling, the volumes are much better than what it was.
Okay. I wanted to understand what your current gross block is and if you're planning any further capex, because you, according to your Q3 call as well, you were expecting gross asset turn of 5 to 6 times by FY24. So just wanted to understand what the gross block would be, and accordingly, it would give us an idea of the revenues.
For us, the net worth the company is nearly 900 crores, and this is definitely, going to increase in the coming financial year. At this moment, our plants, we have now 4 major plants, 2 in Dahej, 1 in Sarigam, and 1 in Silvassa. And these are all running at nearly, half the capacity, or 50 to 60% of the capacity. We feel, the next year, if we want to double from here, we don't need very big capex in the coming years.
I remember in the last quarter, the standalone performance was hit due to the exit of a large customer, where the revenues came down to nil. Can you tell us the progress on customer additions, or have you lost any customers, or any customers have paused on their orders?
As we see, as I said, we started on a new path, new journey 3-4 quarters ago, and this has resulted even, the loss of a substantial customer. Our sales are up, and that too also in spite of falling FG prices. So we see, there is no effect, of exit of a customer.
Okay, all right, Mr. Chari, we'll touch base with you again when you declare your Q4 numbers. Thank you so much for joining us and speaking to us about demand trends and what's happening on ground. So yes, some positive commentary coming in.